Hey everybody, this is Coach D here with TackleTrading.com, and I wanted to take a minute to do a how-to tutorial on how to trade a breakout and to use a trailing stop loss on that breakout. So I was going through this week's scouting report, the stock report, and we had again a couple of really good looking cup and handle breakout patterns. And I was quite taken with this little pattern on ENBL. That's Enable Midstream Partners LP. Nice looking little chart pattern. I like the general setup. And so what I'm going to do is I'm going to take this candidate over into the Thinkorswim virtual platform. I'm going to do this on a paper trade. And I'm just going to show you how to set up a buy stop limit to trigger into the trade, and then to have it set in a trailing stop loss. And we're going to keep it pretty simple, make it easy for you. So we're going to basically take this pattern. What I liked about this was this big cup and handle pattern right here where it hit resistance, and that just happens to be the 200 period simple moving average, that big black line there. And here's the handle right there, boom. And it's looking like it's already trying to poke its head up above there with today's shadow. We really want to see a close above resistance. So I could put in an order to buy here and trigger above the 200 period moving average and see if we can get triggered in on that. And then I can have it kick in a stop loss, a trailing stop loss. Now here's some information we need to know. When you go to put in a trailing stop loss, you don't want to put it too tight. You want to give it some room to breathe. And a good general rule for a swing trader is to use a 1 ATR plus, so more than 1 ATR stop loss or trailing stop loss. So in this case, the average true range indicator I've got up here in the top left corner tells me that the average movement of this stock on a day between the high and the low is about 46 cents. So I could use, say, a 50-cent stop loss or a 55-cent trailing stop loss. That would give it plenty of room. So we're going to go ahead and just go create a little buy order here. And there's lots and lots of ways to go about setting up a buy order. There's no one magic way to do it. I could literally just go right-click and create a buy order right there. I could do buy custom with a stop, and that's an easy way to do that. So I'm going to open up a buy custom with a stop. And I'm going to make my buy order a stop limit, so it has to trigger me into the trade, proving to me that it's breaking out. And then we'll change the stop order into a trail stop and have to tell it. And I think I'll just go ahead and set that out at, give it some room to breathe. I'm going to give it a 55-cent trail stop. That's more than 1 ATR. That's 1.2 ATR. So 1 ATR plus 20 extra percent of the ATR, so 1.2 ATRs. And I'll make that stop good till canceled. I'm going to go ahead and make the buy order good till canceled because I'm not sure it won't trigger it until tomorrow. And then for the entry price, I just need to go back and identify my entry price. So I'd like it to trade and trigger above today's high of 1583. So if it goes above 1583, I'll put the stop at 1585, make it go 2 pennies above that high. Then I can say, but don't spend more than 15. And it's a good idea to give it at least 10% of the ATR here, 1590 or so. So I'm going to have it trigger in above 1585. Don't spend more than 1590. And then it's going to automatically kick in a trailing stop that'll chase the stock by about 1.2 ATRs. So about 55 cents here. And I'll go ahead and confirm and send that order in. And this is just a 100 share position on a $15 stock, so it's only going to take about $800, and the risk is going to be limited to about $55, barring some sort of crazy gap or something like that. So we set that order in, and we should be able to see those orders popping up on a chart here. So there's the order to buy if it triggers in above the high. So it's got to go back above today's high. Let me get a bright color here so you can see that. It's got to go back up above today's high to trigger. And then that trail stop is going to kick in. Whatever price it gets kicked in at, it's going to drop back and it's going to be 55 cents. So minus 55 cents below. And then every penny it moves higher, that trail stop will chase it. But if the prices come down, the trail stop only moves in one direction. So it'll automatically reduce our risk right out of the gates and give you a simple way to trade a breakout. This is Coach D with TackleTrading.com. If you like this little tutorial and you want to learn more, make sure you come find us on YouTube. Click like and follow and subscribe and follow us on YouTube. Of course, come over to our website, www.tackletrading.com, And we've got a pro trial for you. We can gain access to all of our reports, all of our content. We've got tons and tons and tons of material for you to learn. We look forward to seeing you there.